How we doing, everybody? I hope we're doing really good today. Welcome back to the channel. This video we're going to talk about this new tool that Etrade just made available, and it's a little analyzer for earnings plays. So you can look at an earnings announcement and kind of decide on what price that you want to sell or buy options on to make a little bit of money off the earnings announcement. If you use Etrade like I do, we've never had this tool before. Tasty Trade or Tasty Works had this tool, and Thinkorswim had this tool, but Etrade didn't have a tool for earnings announcements, but now they do. So we're gonna look at that little tool, and maybe if you want to make money off earnings announcements, you can use this little tool to help you decide on your strike prices. A couple things that we need to kind of talk about before we look at this tool. We got to talk about first earnings announcements and what they are. Earnings announcements are when stock gets together and they announce how much money they've made or lost in the quarter before. And they announce sales and they announce plans, and they make all these kind of, talk about whatever they want to talk about, and about how the company's doing, maybe a dividend raise or whatever they got going on. And since they can kind of announce all kinds of wacky stuff, stock price can move up or down a whole bunch on these days. And nobody knows if the stock's going to go up or down, or if they're going to make a profit or a loss, or if they make more money than expected or lose more money than expected. And that's why the stock can jump up or down a whole bunch. And this relates to implied volatility. And if we remember pricing of options, the price of an option is made up of three things. Got intrinsic value, which is how much that stock or the option is in the money. We have time value, how long we have till expiration, and then we have implied volatility, just kind of how much we think that the stock is going to go up and down, in the future. Implied volatility will rise, and that means the option price will rise to account for that big expected move, or maybe it's not expected move, but the possibility of something that could happen on these earnings announcements. The amount that the stock price can go up or down, that's called the expected move. And it's it could be 5% or 7% or 3% or whatever. And it's just that, after the earnings announcement, that price is expected to go up 3% or down 3%, or up 7% or down 7%, or whatever the expected range is. Now, once this announcement is over and all the information is made public and the market reacts and the stock does what it's gonna do, then that unknown factor goes away, since we know what the earnings announcement is, and implied volatility will go down. And that is called IV crush. If we have an option, the price of the option should go down, or at least the amount of implied volatility will decrease in the option price. Now, if you're a options buyer, this is a bad thing, because you want to buy this option and sell it for more money. But you have this IV crush that's working against you and taking value away from your price. So hopefully that you'll be able to pick the stock price, or pick a strike price, and that will go, the stock can move beyond the expected range. But you can also kind of just capture that IV crush and by selling options. And you would the idea is you would sell a put or a call at the edge of that expected move. And as long as the stock price doesn't exceed that, you'll benefit from the IV crush, and then you'll be able to sell or buy to close your option and make a little bit of money that way. Now we can jump into the E-Trade and look at this little earnings announcement analyzer they got. All right, here we are in the Power E-Trade little platform they have, and you'll be able to know that a stock has an earnings announcement coming up because it'll have this big E right next to the ticker. So, coming up, we have Oracle, AMC, Wheat and Precious Metals, and DocuSign. So let's just go ahead, and all you have to do to find this is just click on that E, and it'll show you all this information that we have for the earnings announcement. So here we have we're looking at DocuSign. So we have our blue dotted line is our average implied move for however long this chart goes to. Looks like it goes back a couple of years to, 2018. So the average move, the average implied move is what people think it will do is 9.7%. And then the average actual move is 8.3%. So that's a good thing because, we got that average working in our favor there, where the implied move is higher than the actual move usually. So our blue bar, we look here, here's our blue bar this is our next earnings announcement here. So our earnings announcement is on March 11 after the market closes, and there's an implied move of 10.26%. So options are pricing in that this stock can go up or down 10.26%. If we look at the history of our implied moves in earnings announcements before, and then if it's red, then there was a bad earnings announcement and it went down. And then if it's green, the stock price went up. So what are we looking here? We got 1, 2, 3, 4, 5 moves down, and then 1, 2, 3, 4 moves up. Then we just go ahead and take a look at a table here, a little bit more information on the earnings announcement, estimated earnings per share, actual earnings per share, the move that followed, and then expected IV and actual IV. So after that, and if we wanted to, use this information to make an earnings play, so we could just click the build trade button, and we can decide, are we bullish? Do we think the stock is going to go up after the earnings announcement? Do we think it's going to go down? Is it going to be, what's this, volatility? But we don't know the direction. And then neutral. So if we just go, click on here, and it'll give us a bunch of different options that we can choose if we think that the stock price is going to go up. And go back, and then we can choose, what we think if the stock price will go down. We could buy, if we think the stock price is going to go down, we could buy a put. Then we'll come to this screen, and it'll kind of set everything up, and we can choose, what strike price we want. Go back to neutral, and then we can, here we have cash secured put, and this is a little better. I like this. So if we have right now, what is this? DocuSign's trading at 204, and we have like a 10% expected move. So we'd want to probably drop this down to, we drop this down to $180 strike price. That's beyond our expected move, and we'd get, can we see it over there? Get out of here. We could sell this $180 strike price for DocuSign for $226. Then the idea is that implied volatility will drop and we'd be able to buy this back for less money and, make a little bit of profit off of that. Then all you gotta do is just to choose your strike price, you just gotta drag this thing around to where you want it. Well, there you go. That's pretty easy. Etrade's made it a lot more simple to sell and buy options for earnings announcements. I think it's pretty cool. I personally don't like earnings announcements. I played with them a little bit, but I don't really think that it's a reliable way to make money. I think that these expected moves can be really big and then wipe out, plenty of, your one big loser will wipe out a whole bunch of little winners. That's my take on earnings announcements and earnings plays. I think that's all I got for this video. Go ahead, give me a thumbs up if you're still watching. Subscribe to the channel. And then if you've got any good tips about earnings announcements, earnings plays, go ahead and leave a comment down below. How are you making the most money out of these earnings plays? All right, I think that's all I got. So, like, subscribe, and I want you to go have a good day, all right? Justin out.